Hi there, thanks for tuning in. Today, we're going to be doing an analysis and valuation of Procaps Group Sociedad Anónima. It is a company that manufactures drugs in Colombia, in a lot of other Latin American countries, and to a lesser extent in the US and Europe. So, let's just hop right in. Basically, I'm talking about the most recent quarter 2 2023, that they reported, and how all of their business is broken down into 5 different businesses: NextGel, Procaps Colombia, CanSand, and Diabetrics. So these are the different services they have, the different sub companies they have into the Procaps group. And generally, revenue has increased across the board in this last quarter and this last half of the year. So it seems like demand is generally growing, and that's what we like to see, at least in the near term, right? And however, when we look at gross profit and we look at the contribution margin for things, that's struggling a little bit, right? So they're getting more in the top line, they're getting a little less in the bottom line, so maybe there's a little less efficiency there when it comes to creating new drugs, right? And I understand when you roll out a new drug, it may be less efficient because you're still getting some things figured out, right? But this is a trend that we should seek to revert, at least in the longer term, right? So they also have quite a bit of indebtedness, which is important to note. In 2022, their net debt to EBITDA was 3.5 times. Now it's 4.5 times. That's quite a lot. The reason this matters is because in the case that the company declares bankruptcy, they are going to start returning money to everyone who's a debt holder first: banks, bondholders, etc. And then if anything is left, then the shareholders get some money back. So essentially, you would be last on the list, especially if the net debt to EBITDA is very high. So that's important to note. And their cash on hand, they said it's impacted by working capital and debt service, but essentially, they really don't have much cash. So that's very, very important to note. And their inventories are increasing to offset a supply crisis, but that can also backfire, honestly, because if you have many inventories and not as much demand, then you have to sell it at a discount. So let's talk about their revenues. So essentially, we see revenue that's increasing, not by exponential amounts. Well, it did from 2020 to 21, and then it sort of stayed flat there. And then gross profit, it's getting slightly better. Income and loss before tax, or income and loss for the year, we see also a picture that got better in 2022, but in 2021, they definitely struggled a little more, right? Generally, these finance and income expenses have been the difference maker in every single year. So if you're going to look into Procaps deeper, you have to analyze why that happens, why that was positive in 2022 and not in 2021 or 2020, right? We also have a breakdown of where they do their business. So essentially, it's almost all in South America, some in Central America, North America, and Europe, with North America not growing as much as you would think, but then Central America especially growing, South America in the long term growing, and Europe staying stagnant. So really, they are a Latin American company, right? And that is important to note. We are also going to predict free cash flow. Why? Because I like to make quantitative models, right? I'm going to make a discounted cash flow model, and I want to predict free cash flow. So I went into Yahoo Finance, I went into the analyst tab, and here I have 2 analyst estimates for the revenue they're going to make in future years. So you have the high estimate and you have a low estimate. I'm going to grab these lower estimates. Why? Because I want to be conservative. I consider this my margin of safety. Just to be safe, just to assume they don't do as great as predicted, I'm going to grab this low estimate for 2023 and 2024. I'm also going to look at the revenue to free cash flow in previous years. So free cash flow was actually negative last year. This is mainly due to increased inventories and to other struggles with profitability, but it's important to note. And if you look at the picture from 2019 to 2022, the average of revenue that gets turned to free cash flow is 10%. It is skewed by this negative number, but I'm going to say 10% because I'm not going to suppose that if I delete this negative number, it's going to jump back to 15% or so. I won't assume that they'll go from negative to 15%. I don't think that's realistic, right? So based on this, I'm going to plug in those numbers, assume 10% of revenue gets turned to free cash flow. I'm also going to give them a revenue growth rate in perpetuity of 3%, right? You could edit this a little bit, but I am a little bit skeptical of the growth rate so far. Revenue growth rate has seemed a little choppy, and also the Latin American economic growth forecast is also a little bit choppy. So it's important to note. With that said, their fair value, with an 11% required rate of return, which is 1% more per year than the overall market, and a perpetual growth rate of 3%, would be $5.45. However, once we subtract the net debt, and we were saying there's quite a lot of it, then the value almost halves basically to $2.71 with net debt included. Now let's see where Procaps is. Wow. So essentially what you see here is that they went public as a SPAC, and since then they've taken quite the tumble. It's quite amazing, actually, the tumble they've taken. So this is the story with most stocks that went up as a SPAC, and now, well, they're seeing the pain of the lesser demand, higher interest rates, etc. And this is something to note. This happened to Procaps too. However, this $2.80 as of November 24th is very similar to this $2.71 I'm getting for fair value. So at this $2.80 level, I wouldn't really buy it. Even a little lower than that, I wouldn't really buy it. But if you get to the $2 range, well, I could be potentially interested. Now, there's two stories here. One is the growth story. While revenue growth is choppy for Procaps, there's plenty of room to grow worldwide, making it unlikely that the company will shrink or suffer significantly, especially because, for example, it has diabetes medication or other types of medication that people will always sort of need. There will always be sick people in the world, unfortunately, but their business is a little more inelastic, right? There will always be demand for their products, and they have plenty of markets to grow in, right? Latin America's economy will grow slower, but it won't necessarily shrink, right? Recent share buybacks return plenty of value to shareholders. They have bought back shares since going public, and that's a good thing. So it's a way where they're directly returning money to shareholders and pretty tax efficiently. A buyout can also happen, especially at such low valuations. This is something that we're not necessarily accounting for, but if it does happen, I can see the stock go 3 times higher, right? If another big pharma company or something says, Procaps, we want you, right? But there are some struggles. The Latin American economy is lagging. That means that growth in its greatest area of sales is threatened, right? Most of its sales come from South and Central America. And if the economic growth in South and Central America is smaller than anticipated, which is what has happened in this last decade with all of Latin America, basically, then Procaps is also going to see lower growth. Revenue growth and free cash flow margins have been very choppy. They have correlated a little bit with going public. They have had some suffering there. However, you want to see more consistent margins and more consistent growth in the long term, right? So that's something to keep an eye out for. That is also very high relative to what the company has in cash, which can be very problematic if not paid down, as I already explained. So overall, I am going to say, what drives value, right? What drives value for Procaps? Is it that it has a lot of potential, that its revenues are going to grow a lot in the future, because it's still a very small company, right? Its market cap is only 320 million, maybe even less if it goes down a little bit, which is actually very comparable to the amount of debt it has. But does that drive its value, that it's a very small company with a lot of growth prospects, that it's going to make a lot of future cash that you're going to take advantage of? Is it the share buybacks, or is it the fact that it's not growing enough, right? So it doesn't have enough value for you as an investor. And if you are investing in Procaps, maybe you're taking a little bit more risk, right? Because you are looking at that future growth prospects and hoping that happens. So with that said, I hope that this was a good idea a good video to think about Procaps. Think about it as a company and see if ideas like these, small companies like these, companies outside of the US are worth your time, and if the risk is worth taking for you personally. Now, thank you so much for watching. I hope you got a lot out of this video. If you want me to analyze any other stocks, feel free to comment down below. I read every single comment. Thank you so much again, and have a great rest of your day.